But the current conditions are so volatile that I was actually somewhat doubtful, starting to doubt myself. My gosh, is this actually going to work? Because the conditions are so ugly right now that the system performance has not been very good. And so what I noticed was that as the market here has started to settle down, it's kind of going back to the results I was seeing during development. And so what happened is we went live, the markets had gone berserk, and I was working through different adjustments to make to kind of deal with that volatility. And then as the market it's started to settle down a bit, it's not quite back to whatever that new normal is going to be, but clearly it is getting better. And I noticed that because I've been adding filters and doing adjustments and things like that, trying to deal with the volatility. And in the meantime, I've got members who are just using the system sort of as it was defined, and starting last week, it started to perform pretty well, even just using the regular system. And so what I did, so I was dealing with that doubt. Gosh, did I make some major error somewhere? Did I make a big mistake? And just not understand how all this works. And so what I did is I went and I took this complete model concept we've been discussing, and I took the results of some of the analysis that I've done that you can see in the daily videos from this past week, and I built a complete model for the NASDAQ for the 2017 contracts, so HMUZ for 17, okay, which ends on December 7th or 8th of last year. And then I tested that model on the H contract for 2018, which starts the next day, like December 8th or something, okay. And what I did is the first test is right here. All right, this is the actual trade activity log from Sierra chart. You can see it starts from 12/8. Okay, and so this is the Rev 55, which means it's the current Rev we've been using, plus the information about the most recent two waves or two peaks of waves. So the recent highs and lows of the last two waves. That's discussed in the daily videos this week. Okay, a complete model, so a single model for all behaviors. And this is no filters, just as I'd been developing the system. Okay, and what I wanted to do is I wanted to sort of re-verify, okay, yeah, this does work, absent crazy volatility. All right, and so the idea was build a complete model for the last year, and then test it on, basically it works out to be most of December and all of January, okay, because February 2nd is when the wheels fell off the bus. So that's what you see here. This first one here is exactly what I'd been doing, no filters, nothing, just when you see that behavior, make a prediction, and I used 80 tick targets. Okay, so 80 tick targets trail by 20 after you get 20. The exact trade management that I'm using in the live trading today. Okay, and what we see here is this is the P&L for the day. Let's make this some color here. That's the P&L for the day, and then this is the running P&L. Okay, so this is the one we're going to be focusing on. That yellow might be too hard to see. Okay. And what you see here is in December, there's a little bit of an ugly stretch right there, but for the most part, not too bad. You come out of December basically flat. January, you start making you start doing pretty well. Okay, you start building up, and then this day right here is where I'd call the end. So let's make that orange or something. Okay, because that's the day where everything, the market just went berserk. And very clearly you can actually see that in the data here, in the daily results since the volatility went through the roof. It's just nothing but negatives. Okay, But up to that point, in a 2-month period of time, 22.55 on a $5,000 account. Okay, so that's a little more than 40%. All right, certainly good, certainly acceptable. All right, so not in any way, okay, Shane, you were just completely wrong as you developed this. Volatility is another issue. We're going to talk about that in a minute. All right, this is what I did with no filtering at all. If I see that behavior, give me a prediction, and then execute that trade. It's set for the same settings we have now, which is a $115 loss. You stop. So your max loss is like 160, and then the max gain was set at I don't remember now, a lot, like 1,000 or something. Yeah. So basically, if you got 20% of your account, just stop. Otherwise, just keep trading. Okay. How many trades per day, Dave? I can actually give you these spreadsheets so you can see that. But you can see the number of trades is very reasonable. These are not in any way outrageous. All right. None of this is nasty. It's not like recently when the volatility is so high, the market just went crazy. All right. So 9. These low ones are the days where you just basically got whacked pretty quick. All right, 9, 3, 13, 12, 10. This is all reasonable, all right? This is way more trades than I ever take as a discretionary trader. But as a machine, this is not in any way, I think, unreasonable, particularly since I'm not doing any effort, right? I'm just letting it go. Commissions are not included in this discussion. This is just gross and net proceeds from the trades themselves. Okay, so now, having said that, we've actually done some interesting things together as a group in related to filtering. So things like when the markets are sideways, don't trade, and other things. I've been working with Russ on some oscillators. Okay, so let's look at the next test I ran. Okay, so basically this test here validated that I haven't wasted a year of my life. Okay. Where's the next one here? Here's no filters. The same test again, but this time with a 40 tick target instead of 80. All right, so instead of, you place the trade, you set your target out at 80 ticks, and then you just start trailing by 20 when you get to 20. All right. Here we set the target to 40. All right. Here's the P&L column. This is the running column. All right. So let's make that green. Oops. Thank you, Microsoft. All right. All right. And so ultimately we're just going to look at that one right there. All right, that's the ending value. All right, and so what I see there is a really big difference. All right, so very clearly, don't limit your upside. Is the message? Very objective analysis. Philosophically, I'm very pleased because that's how I view the market. Limit your losses. Don't limit your upside. You can see a huge difference here. That's 3 times the amount if you just set it to 80 ticks and let it go. All right. There's no human intervention at all in these tests. This is all just Sierra chart replay. Okay, so Bill is asking. There's a couple great questions here. So let's do Brian first since he was in first. How do you know ahead of time the volatility will change and stay that way? So Brian, it's actually not that difficult at all. In the NASDAQ, we look at the overnight range. And in the past, there was a very clear delineation between, 40-point overnight range, 50-point overnight range, 60-point overnight range, and it was very, there's actually up on the site, you can still go get it. There's an NQ volatility assessment guide, and I need one for the machine learning system. It's very simple. All right. So the simplest answer is when it gets volatile, don't trade. Don't run the system. That's the simple answer. All right, and so it's not an answer people want to hear because they want to make money all the time, right? They want to at least have the opportunity to make money all the time. Even worse, they see the big moves and they get stars in their eyes and they get greedy and want to make that money. Not really internalizing that it's far more unpredictable under those conditions. All right, it's like the surfer who can handle 10-foot waves and then 40-foot waves come in, and instead of heading to shore, he tries to surf it and ends up in the hospital or the morgue. Okay, so it becomes it's not that hard, is my point, Brian. You're not trying to make a decision every day, because the market goes through periods where it's super volatile and then it'll settle back down, and then it'll go super volatile again, and then it'll settle back, and then it's just a matter of make that decision on the weekend, and then follow your plan for that week. It's really simple. What you need to do is simple. Doing it can be hard. All right, that's something I've been teaching for years. But define a set of rules and just follow them. Okay, and in this case, it's really not that difficult to figure out. The markets are too volatile to trade. All right, what you'll discover if you watch the markets a lot is that you get a feel for I don't want to do this. This is too scary. This is too difficult. We have to relearn that a little bit because now the machine can do things better than we can in some ways, and so there's some adjustment is needed there. But certainly the machine can trade volatility that I can't. But when it gets too crazy, it's just stupid to do it. The unpredictability is too high. Okay, I'm working down questions here. Bill says, were you at all interested in what the results would have been if you had not stopped trading after the loss limits were hit? Yes, I'm very interested in that. Because one of the questions is, well, if I just cut my size in half and take more shots at the basket, can I trade that volatility? And so, Bill, I tested that in the volatile conditions. What I didn't test that in the non-volatile conditions. So I need to do that because I'm really interested in understanding. This is taking 1% risk per trade on a $5,000 account. What if I take 1% risk per trade? 0.5% risk per trade on a $10,000 account, but still am willing to risk 3% a day. So in other words, I get 6 tries at the basket instead of 3. All right. So that's a test that needs to be done. I really want to know the answer. As a human trading, the lower your percent risk per trade, the better, because the less the intensity of the emotional reaction you're having to that risk. All right, but the machine doesn't care, so it's just a matter of let's work out the math. Did you say you used an 80 tick profit and a 20 tick stop loss? No, that's not what I said, Randy. I'm using the current trade parameters that I have now, which is a 10 tick stop loss. At 10 ticks, move to -5. Okay. And then at 20, start trailing by 20. Okay, but a hard target of 80. Okay. And so basically, I used to just trade for 40 ticks and discovered that most people have trouble even holding for that. Here you can very clearly see there's a lot of times the markets move more than 40 ticks and don't pull back 20 ticks while that's happening, because that's 3 times the game. All right, so it's very, very clear. Set it to 80 ticks and let it go. Sometimes you're going to be upset because you would have made more if you took your 40 tick gain, but across a 2-month period, this is statistically valid now. Across this period, it's very clear. All right, just let it go. In your experience, does the NQ have better days to trade? I don't think so, but you actually can use the replay to see that, because in the trade activity log, they have that built in somewhere. Period trade stats. Yeah, you can somewhere you can say Mondays, Tuesdays, Wednesdays, and look at it. So you could run the replay yourself, Philip, and then see. I've never not traded because it's Monday. Randy, so are you clear on the trade management? Let me just make sure, because your question, I'm just looking at your next question. Okay. So, and then Larry, I think we've covered this already. You know, one of the ways that in the past I've gauged volatility is how big was the overnight move. Okay. Bill, Brian, okay, Brian, I'm just going to read your question because I don't quite understand it. Can you trade the system to high overnight range and let the system switch at market open depending on the overnight range between the high vol and low vol system? I don't understand what you're asking. With the new server architecture, you can have different chart books running at the same time with different sets of parameters. And the only question is, will Sierra chart be upset because you tried to place a long when you're short? The machine learning system will no longer care. If you have a chart book set up that's for, you know, cash session start to the morning, and you've got another one running from overnight with different parameters, you can do all that. I'm not sure I'm answering your question though, Brian. I'm not done here though. Let's continue because I did some more testing here, and I want to. It really addresses sort of the power of community. All right. So this was the one on the left was validating that Shane didn't waste a year of his life. The next one was, okay, well, you know, what if you try to just take a smaller bite out of the market? All right. And we can see clearly that you're better off just letting it run. But what we did as we saw this volatility happen was we started talking about different ways to filter out times when it's really not that smart. All right. And that actually drove some modeling work on my end to give the system more information about, is it moving sideways or not. So there was one incremental improvement already in Rev 49. There's another one in Rev 55, but there's also an external one that we can apply that makes sense to me to keep out of the machine learning system. Just let you, the user, decide how aggressive or conservative you want to be. And so what we do is, one of those filters was just take a standard moving average and look at its slope. And if the slope is too flat, don't trade. Okay? And so that is what we call the noise filter. That's actually built into the system. It's right here. You know, this is a noise filter of 4. What's actually going on there is it says, here's an 89 period moving average, and here's the angle of that moving average, and if that number is, you know, less than 4 or greater than -4, if it's between those values, the markets are sideways, don't trade them. Don't allow the trade to go off. All right, that's the spreadsheet's doing that. Note that you can define that all you want. You can change that. You can change that moving average. You can change the amount of slope you're willing to trade or not trade. Okay, but what we've been using is 6 and 4 have been the two candidates in the current volatility. All right. And so what I did is, because of discussions I had with Daniel over the week, I took the trade that I ran right here, this trade, okay, on the left, where you know, that's a very nice profit across 2 months, and I said, okay, what if I apply the noise filter? What happens? Do I keep myself out of trades that would lose money, or do I prevent myself from getting into good trades? What happens? What's the overall result? Okay, so that is right here. Rev 55 NF4 only. That's here. All right, so our green, let me get this other spreadsheet out of it. The green, let's make this green so we can easily compare them. Okay, so here's the basically test 1, but with a filter, a noise filter. All right, and what you see very clearly is just a spectacular number. Okay, so you can look at that day by day, and you can see what's happening. In fact, it's I can package these up and make them available for download if you guys want, or just email them out to the members. A very dramatic difference. So very clearly to me, that mechanism, which some of you really dislike, all right, has a huge positive impact on the overall profitability of the system. Okay, that's 80% in 2 months. That's a ridiculous return. Okay, now speaking to those of you some of you that hate this idea of this way of filtering out sideways action, I also ran the test that uses the oscillator that we've been working with. So over the same period of time, we have you've seen. Let me see. Can I? Where is the? Not that one. This one. So you've seen this oscillator here, this blue and pink line. All right, this is based on some discussions with Russ about only trading in the direction of this oscillator. So if you get a trade that is along while the oscillator is pointing down, then you would filter that out. Okay. So I did a test, the same test. All right. I removed the noise filter. I just set that to 0, and I said, okay, do the same test with just trading in the direction of that oscillator. Okay. And the results were here. Let me get this other stuff out of the way. Here are those results. This is, I should say MTF, not NTF. MTF is multi-time frame. All right, and so that's these results. So this is test number 1 again, but using this oscillator as a filter instead of the moving average noise filter. Okay, so let's make this green so it's easy to compare. And what you see is, here is the second. It's basically equivalent to a 40 tick target test. It's dramatically worse than no filter at all, and even way worse than using the noise filter, the moving average noise filter. So I'm sorry, Russ. Objectively speaking, the noise filter, that as we've defined it, works much better. Okay, so that's kind of where we stand in terms of, okay, under normal conditions, however you define normal, there's very clearly an edge that we have by using machine learning. All right, and particularly if we apply an extra filter over here to try to avoid choppy markets. And I got to stop and look at questions. I'm sorry.